Good morning, everybody. Back to work. It's not really work if you enjoy what you do, right? Yeah, I hope everyone's doing well. But yeah, as always, looking at the economic calendar, first and foremost, we see that there's no news. Again, even tomorrow is going to have no news. So what do we do with that information? When there's no news, you are supposed to expect, if you're listening to what ICT teaches, that there could be a high resistance environment. There could be a, harder to read, less correlated, more high resistance style delivery today. Doesn't always happen, right? Like yesterday, we did pretty well in my private community. I sent out some of those engagements in the free Discord. So you guys got a chance to see the level we were aiming for. We called it well in advance. And it's 21,287 in the NQ. I believe. Maybe it was, which one was it? Let me go double check with it. But it was basically this high up here. The one that I just mentioned was London's high, and then this one we've had outlined obviously since Sunday. But nonetheless, everything has basically worked out exactly to the point, exactly how we wanted to see it deliver so far. I expected this to somewhat kind of lag up until either today or tomorrow, then deliver to the levels. But we were obviously in a massive hurry to get up to these highs up here. Got above the new week opening gap, and the price ended up just giving us a nice show of expansion through the high, right? So let me just set some stuff up real quick. So yeah, let's just take a glance at the yields. Yields ended up taking out the exact level that I was watching for when we went into the week. So that was taken. There is an SMT at the highs, just a slight SMT, so we'll see if that has any impact. We're going to have to see some heavy displacement if I'm going to think this market's going to do something other than going higher. We talked about this order block, staying above that would basically promote us continuing. The wick up here, all the quadrants became targets. We pretty much have bounced from the midpoint of this, from the high of this candle, which is an order block. So again, my line in the sand to change the narrative, because narrative doesn't change, bias may because of retracements and consolidation. But what I want to see in order for me to switch this opinion from this going higher to going lower is going to have to see some of these levels down here violated. Preferably, all the way down here if I'm being real conservative. I could be a little more aggressive in my anticipation if we violate these levels and get below the middle portion of this bullish order block. But again, we have this large wick here, so we shouldn't really have to come too deep back into this level if we are going to see a pretty fast move to the buy side still and be in a healthy run higher. But again, this is kind of going against what we're seeing in the DXY. The yields are supposed to dictate or give us a heavy influence on where the DXY goes. Right now, of course, there's a crack in that correlation. There's been a crack in correlation between the bonds and yields and the DXY and the indices for a while now, since February. And that's simply because of all the stuff that's changing in the U.S. economy. The market's trying to figure out what exactly is going to be taking place. What are the impacts of things? And, sometimes that takes time to price in. Because of that uncertainty, we see a crack in correlation and a harder to trade environment if you're going to be using correlation tools and things like that. But again, when things are just cracked in correlation, you keep that in mind because that tells you that since it's cracked in correlation, the conditions are higher risk. So you will do what you will with that information in terms of risk adjustments. But when you get more advanced in your understanding, it's not going to really phase you that much, and you'll be able to navigate fairly confidently, even when things are a bit off when it comes to correlation. But for a new trader just trying to figure this out, right, and get used to this type of analysis, you want to keep that rule in mind, because even if you're a good trader, it's still a higher risk environment when there's a crack in correlation. ICT has said that that's the first signifier or signal that we are in either a harder to trade condition or a very smooth, fast-paced trending environment. If we are correlated, that supports a fast-paced, clean environment. If we are cracked in correlation, generally that can give you a little bit more difficulties than usual. So again, very important topic for you to at least think about when you're in the markets. So if you take a loss, or if something's incorrect or it seems difficult, and you see these types of things in place across the different assets in terms of correlation, you'll be able to be a little more reasonable with yourself and kind of know that we are in a harder to trade environment, at least for new traders. So yeah. That being said, let me pull up the bonds real quick. Again, we have no news ahead of 6:30, even after 6:30, none at all today. So that again tells us that we don't look to take any engagements before 6:30 AM Pacific Standard Time. Okay. It's just a very helpful rule, so I encourage you to consider it. And if we look at the bonds here, remember this is the market that generally influences where the indices are going to go. You see the crack and correlation here as well. Okay, so again, a higher risk environment. It seems as though we've taken the low out here. There is a slight S&T, but we're also kind of going sideways, trading inside this weekly range here from April 7th of this year. Doing a lot of work inside this monthly bearish fair value gap. It seems to be holding price. So, we're going to keep that in mind. We got an inversion fair value gap here on this one. Mind you, these are correlated, pretty much very similar assets in the same asset class. You could see just how correlated they are. So, if you find one thing on one, you could kind of use that information on the other as well, because they're that correlated. It's just different time intervals, 5, 10, 30 years. Okay, so we have the fair value gap down here. If it is going to continue to drop, that will be pretty much what we want to look at. Only way I will, really trust this going higher is if we can get above this high here, because that'll be a shift from, this mess to possibly, giving us a better shot to attack this high. But we're below this bearish order block. Okay, notice the midpoint closed below it, so we've just been gravitating towards the low here. So we're going to continue to see if that's going to be the case. Correlation in terms of having an impact on what the indices are going to do or our decision, because there's a crack in correlation, we are going to put this to the side and not really use it as too much of a deciding factor. When things are cracked in correlation between those assets or any other tool, like say it's not showing any evidence or making any sense for one way or the other, you keep it in mind, but you put it to the side for a little bit until it can get back in line or show us that it's interested in correlating. That mindset makes it so it's easier for you to go into the chart, use your technicals, and still be confident in what you see in like the indices or something like that, or DXY. Okay, I get a lot of questions about that, like, oh, well, we talk about this all the time, but what do I do if it's cracked in correlation and it's not being helpful? Well, same with COT as well. If it's not being helpful, you just put it aside until it becomes helpful. And then you just depend on the DXY relationship and the indices relationship. And then the three indices together, those will be your foundation when the interest rates are not really being helpful, or other tools aren't being helpful, like COT and stuff like that. All right, so yeah, I hope that's helpful. If we're looking at the currencies here, we could see, we're still gravitating to the buy side. We did give that retracement. Again, I've had this outlined for weeks at this point, and it has unfolded in a very, very nasty way. The currencies are looking disgusting. Euro is a little okay, but it's very overlappy on these higher time frames. That's a signal of high resistance. Price being in consolidation is a signifier of high resistance as well, and the Kraken correlation. So you add those things together, and you could just see, easily that we are in a harder to trade environment. At least when you're looking at the currencies. DXY has given a retracement here. Still seems like it's still favoring the fact that this is going to still want to go lower. Unless we get a displacement that gets us back above this weekly fair value gap I've had outlined, we're going to continue to want to see this go lower. We have trend line liquidity here, so price has engaged that. So we're going to watch this wick midpoint. We're going to watch this new week opening gap from a week ago, and we're going to see if we could stay below that, see if we could stay below this low or this high here. This here, given the fact that there is a swing high here, swing high to the right that's lower, and a swing high to the left over here that's lower, and we traded into a fair value gap on this higher time frame, we may see this act as an intermediate term high. So unless this is violated, first signifier would be obviously this high getting displaced through, leaving the lows. But if this holds, that's signifying that we're going to continue to support downside delivery. If you take it from this high up here down to the low, you could see that we just basically came up to a premium and now have started a move to the downside with very obvious equal lows here, and just relative previous lows from previous weeks. This is a weekly low. It's between these two gray areas, which highlights each Sunday. So that's a weekly low. That's a weekly low. This is currently our weekly low. This was a weekly low too. So we swept weekly lows from last week. So that liquidity has been engaged. But again, higher time frame structurally, we are seeing that this is just a simple retracement, unless of course it starts to displace higher, in which case we would then look to adjust and start to want to seek higher prices. That would instigate potential decline or retracement here in the indices. So we're going to fill that out. This is also overlapping, like I just mentioned, with the DXY, or with the currencies, right? They're kind of overlappy. So again, high resistance. We've delivered up through a buy-side liquidity pool, and then we just basically have returned from this low to that high, almost exactly to the equilibrium of this daily or 8-hour perspective, right? Equilibrium's down here. So, we're going to see how that's going to be treated. If we displace and get below this new week opening gap, and we could see a displacement here attempting to get above this high, then again, that will be significant, and we will look to see, maybe even see this low violated, and maybe even attempt to get into the rest of this daily fair value gap level. So far, though, it seems as though it's held up. This wick here is also going to be impactful. If we could stay above that, stay above this daily fair value gap, that would be helpful in terms of us continuing to seek higher prices. This will just be a simple retracement. Just because it would take this low doesn't mean that we would then look to change our narrative. In this case, bias would change because it's already been super aggressive bullish. It's hit an opposing weekly PD array. That would then instigate a possible retracement just to set up further bias, unless of course we lose this fair value gap too, along with this swing low being violated. Okay, so that would then start to make us believe that we may be headed back down into something like this. Okay, if we look at the higher time frame here, I've mapped this out with my private community. I think I sent it out as well with the free Discord, that we may be seeing a market maker buy model. Okay, we don't want to see us break through the second stage distribution area I have outlined. If it breaks through that and breaks through this fair value gap, then again, we're starting to see information telling us that we may be adjusting for a deeper decline. And then of course, if DXY was to rally on the heels of that, that would be significant for this to decline as well. But that's all obviously down the road. That's not present right now. So given what we see right now, we're going to stick to our higher time frame narrative and try to see if there's reasons to want to buy. So yeah, hope that makes sense and is easy enough to follow along with. But yeah, my study this morning is going to be how we're going to treat this second stage distribution and whether we are going to leave this low untapped. Again, if we get below this new week opening gap and start, displacing, my attention can simply switch to us attacking the low here. That's obviously a contingency. My main objective is to see if we can dig a little bit deeper into this weekly fair value gap. But of course, if it is going to decide to retrace, which is a 50-50 chance right here because we're in consolidation, we'll be able to adjust to that as well. But we're going to stick to the higher time frame narrative because that's what's king. And so that's essentially what our perspective is this morning going into the open, which just took place. Let's go observe our regular trading hours gaps. London's low is right here. Okay, so London's high is there. It's kind of inside this little range. Let's got London's low. Go look at the comments. Insane, it played out exactly how you marked. Damn right, Tony. Shoot. It's normal over here, bro. So. Mind you, the results that we see in terms of price delivering, where it goes, like where we say it's going to go, is a product of the processes we employ. Okay? It's not just like magic. Kind of feels like magic sometimes, but it's because we have such a detailed process that takes a little bit of time to master, yes. It may seem complex to those that have like less than a year experience. That's totally normal. But, if you want to do great things, it requires great skills. Great skills require time and sacrifice. The amount of sleepless nights, blown accounts, feeling a failure, not getting there quick enough, me having to overcome those things, the amount of, times I've had to think about and go through certain things, I mean, it shows in the market. When you really put effort into something and you have the right information and you're following the right advice, you're teachable, you're willing to make adjustments where it's necessary, the better your chances are. And then, of course, coming and watching how this stuff works out every single week, almost on a daily basis for years at this point, hopefully gives you the encouragement that, you should stick to this type of trading, smart money, ICT concepts, whatever you want to call it. And, just weather the storm because the sun shines brighter after storms anyway. So yeah. So it does seem like this may want to deliver below this London's low. How it delivers once it sweeps that London's low is going to be something I want to monitor. Remember, if we break through this new week opening gap and we end up rampaging through it, then obviously we can consider that the low down here may get taken out. It's yesterday's London low. So basically previous day's lows down here. So if that wants to be targeted, so be it. This here seems to have been a pretty decent attempt to get down below here. We're too early within the open with zero news, so my rules state that I do not engage until something else takes place into a macro. I did just kind of talk about EU and GU. It's very, very sloppy. I wouldn't trade this market right now. It's a 50-50 shot because we're kind of stuck in consolidation, but my overall view is that we're going to continue to go higher, similar to what we think is going to take place in the indices. But right now, unless something dramatic takes place, we are pretty much in a 50-50 environment. You could see just you really want to engage something like this that looks like this? I wouldn't. If I only traded Forex, this would be a time where I just don't take a trade. For GU, though, I do see a pretty nice target being these equal highs up here. That may be nice. And of course, if the DXY is doing one thing, that tells you all you need to really know in terms of where the currencies are going to go, because they're completely opposed to one another. If the DXY goes lower, these are going to, most of the time go higher. If the DXY is going higher, these are most of the time going to go lower. And if that correlation's off, then again, you're in a higher risk environment, and you got to take consideration to some of the liquidity pools that I talk about: London's high, London's low, previous day's high and low, and then the rest that are on that list. But those right there are pretty much the liquidity that I like to use on a daily basis, if you want to keep it super simple. And DXY, we're trying to see how this order block is going to hold. If we break through the midpoint of this, if we violate the high up here, and we get back above this new week opening gap and this new week opening gap, that's multiple PD arrays, along with the fact that if we get above this weekly fair value gap, that would then put this in jeopardy. Otherwise, we're going to continue to look at this as a retracement to go lower, which should send currencies higher and indices higher as a result. Right, so that is, in a nutshell, the most important topics. We do see the first presented fair value gap, so we're going to use that. That is right here. So again, it does seem like it wants to attempt these lows. So I want to see what the response is going to be here at these lows. We do have very obvious relative equal highs up here in a bullish environment, at least for now on the higher time frame. So I want to see if this swing low getting violated from London, I want to see if that's going to lead us to getting a displacement above this high. Only time I'm going to think that buys can potentially be in play is if we can get back above this high, create a shift in market structure after we've taken the lows here, because that will be in conjunction or in alignment with our higher time frame narrative. And then, if we're proven wrong, we're proven wrong, but I do still trust that we're going to get up above here. Too much positive news has been taking place. Structurally, things don't look like they've changed. Something that goes against that is the fact that we hit that weekly fair value gap and swept the previous week's Thursday and Friday's high so early in the week. Because it rapidly got up there, if we do start seeing evidence that it wants to go lower, that will be the reason why it wants to go lower. And it's simply going to be just a simple retracement to then maybe set up further buys later on. But yeah, I'd like to see, if we could sweep this low, if I'm going to look to find a short. If we could break below this low, we have a big wick. This could turn to a bearish order block, and then that would be when I would, start to make an argument for shorts. Otherwise, again, I'm watching how this high is treated. If we could shift above that aggressively, this high to that low should act in a way like a balanced price range, and then we should be able to see the first presented fair value gap stay respected. And with that behind us, we'd be able to then look to want to seek this London's high / equal highs / no, just I guess that's it. I was thinking about a different time frame. But yeah, so I hope that all makes sense to you guys. So for right now, I'm just waiting, right? I'm gonna wait. I'm not convinced by any of this right now. I do like the fact that we swept this low and now have aggressively pushed away. Now I would really like to see DXY give us a rejection to promote the downside. We have the middle portion of the regular trading hours gap. If we get above that, that's also significant for price wanting to take out these London's highs. Then let me mark this off so y'all know. So first presented fair value gap of New York. If we could stay above that, that would be great. And we also can slip this little concept in there too. We see 9 o'clock. We see the high here. Go 30 minutes out. This range here is significant. So yeah, if we can get back above that, that would have been a good idea for me to want to look to potentially buy. First presented fair value gap, first 30 minutes of the daily range from the open, from the open 30 minutes out, that range we have, you cast that forward, that can act as a significant place and price to help you confirm a narrative on these lower time frames. Obviously, you have to have supporting ideas from the higher time frame, and correlation, stuff like that. It's also helpful. But these three levels in price here are pretty significant. I use them all the time to help confirm particular ideas. Right now, we're just in a slop fest. So if you look to buy or sell, you're probably sweating bullets right now. And you should just wait till the macro comes in, because the macros are programmed times and price, where we will run for either liquidity of some kind, that being highs or lows, equal highs or equal lows, or it will reach into a inefficiency. Right? That's the significance behind the macros and why you should consider, if you haven't already, only looking to position yourself in a move that either started during a macro or is beginning to be started in the macro. Or, the macro may set it up and push it away. If you can confirm your model presented itself from the macro, headed towards a logical level like these equal highs up here, then you can maybe find a continuation variation of your model and then try to engage upon that idea. So I'm going to continue to be monitoring this here. From this low to that high, I want to see how price is going to respect that range in there. Is it going to stay below the middle portion of that, from this low to that high? If it does that, then think of this as a potential bearish order block. If we move up in time frame, I'm sure we could find that it is a bearish order block, at least visually. So I guess I stand somewhat corrected. We do have this wick here. Let's see if we could stay below the midpoint of that. If we look at the consolidation here, if we cast that lower, we could see a first standard deviation, second standard deviation. So, buys are not entirely off the table until something, dramatic happens. And this new week opening gap, may continue to hold price. I don't like these equal highs here if I was looking to be a seller or someone shorting the market. These equal highs are a little bit too obvious. We see a run from this low to this high, sweeping the highs. It does seem like, there's a chance that this is being treated as a balanced price range too. So, we're going to keep that in mind. We have this bullish order block. So again, if it gets above that, I'm favoring more buy-side delivery than shorts because, I stick to my narrative. But again, one of the red flags for that narrative continuing for the rest of the week is the fact that we've already kind of fulfilled a pretty nice size liquidity pool inside of an opposing weekly fair value gap that could send price a little bit lower. So we'll see if this slop fest can open up. We are staying now below the first presented fair value gap, first 30 minutes of the overnight open or of the daily range, the first 30 minutes from the open, and the midpoint of the regular trading hours gap. So if we continue to do this and we displace below this low, we have reasonable observations telling us that we may look to, maybe even close in the rest of this a new week opening gap. But I want to see the behavior from this low. And yeah, see how it continues to deliver. Do you guys have any questions as we're waiting for the macro? Or some observations from the week? Something like that? Guys, let me know if you have any questions. If not, I guess I'm doing my job properly. I do find something interesting that the S&P kind of blew past the weekly fair value gap, so that's definitely interesting. We do still have this very obvious high up here, this weekly high on the Dow. And I mean, nothing in here shows that bearishness is, overly exciting, other than it just, maybe looking to retrace if it was going to look to decline. We also, again, we have this wick here, so we want to see that wick, how it behaves all the way up until that wick is hit. Depending on how that delivers, all the way up until that can be a reasonable area of support to continue to send price higher. But again, we've had this very fast-paced early start to the week, so they were in a rush to trigger in those buy stops, and I wonder why. a lot of times when they do that, they'll go against the narrative that's on the higher time frame. And in this case, that may end up being in the form of a retracement. So yeah. So I like again how we are staying below the overnight first 30 minutes, the first presented fair value gap, and the middle portion of the regular trading hours gap. That is very convincing that price is probably going to be interested in digging a little deeper, as we can see. It's not something I would personally be engaging, but if you had the short idea, considering the things that I talked about, if something made sense to you to short, you're not incorrect. The initial idea was to try to see if price was going to come down to London's low, and then my observation was going to be at these lows to see if we could sweep that, maybe start to run higher a bit. But for now, we're going to continue to watch how this unfolds. Going to look at this as a bearish order block. So if it's going to hold this as a bearish order block, this down wick overlapping this fair value gap should not allow price to want to run deeper into that if it is going to continue to support lower prices. Again, these levels in here, price staying below that, you could see the reaction, right? It's staying below it, continuing to march lower. So the indication that this gives you as a concept of validation is pretty impactful. Those of you that are new here, you'll see that we use this concept all the time, and it is a beautiful thing. It really is. It just complements the other concepts we use to identify bias and narrative. So yeah, let's continue to watch this. Let's kind of scrub around real quick, see what's going on. So there's no SMT at the lows, right? So everything's pretty much in sync. So I like to see when things are in sync. If it was going to want to go higher, I would have really liked to see an SMT. Because that hasn't happened. Again, I'm just going to continue to be patient as we go into the macro. Freddie said, I just started ICT Concepts, trying to absorb everything right now. You're doing awesome explaining. I appreciate you saying that, Freddie. I'm glad that things are making sense to you. Keep showing up. I'm glad that you just started ICT Concepts and you found our channel. Because we will not sugarcoat. I personally will not sugarcoat, and you will not have any type of viewpoint that is overly exaggerated. Your expectations are going to be set properly by spending time with us, which is a hugely important thing for new traders. Because if you have too high of expectations, you'll feel let down. You'll feel lots of negative emotions towards trading in general early on, because it's not working out in like a week or two, or even a month or a year in many cases. That's not to say that'll be you, right? It's not going to take you 10 years to learn this, especially when you're around communities like ours and you're watching ICT Concepts, and the concepts alone can take maybe a year or two to really get a grasp on the different elements. But depending on your study, depending on your mindset, depending on your sphere of influence, like those who you allow to be influencing you, all of that type of stuff will be a very strong impact on the speed in which you're able to learn. And then of course your ability to be teachable and adjust and admit when you're wrong and not be negative about it, look at it as lessons and stuff like that. All that stuff is a determining factor as far as how quick it'll take you to learn. So I appreciate you being here. I know you've popped in a couple times before, so maybe there's another Freddy that I've seen. There's a couple Tonys, there's a couple Freddys, there's a couple Marks. So, and the age ranges are pretty amazing. I figured out last week that it ranges from 18-year-olds to as old as 65 years old. It's pretty crazy. That just shows you, it's never too late, and especially if you're under 20 years old or under 30, you should not be worried about anything. So I see this Kraken correlation between the DXY and the indices. That's not very confidence building for me to want to look to engage as short. If you look in here, unless you took this run above these short-term highs in here, the displacement here before the 630 open, and you engaged in the sloppiness, you would not have had an opportunity. And if you're following the rules that I employ, that I talk about, you're kind of going against the rules. We have hit the macro finally, so we did see a delivery right ahead of the macro hitting this fair value gap. So we've also fulfilled the midpoint of this new week opening gap. So I want to observe how this behavior is going to be. Given the fact that there's correlation issues, given the fact that there's no news, given the fact that the higher time frame is very back and forth, overlapping, all those indicate to me that we are in low probability, harder to read environments. So with that being on the table, although we may want to hurry up and take an entry, and we may be excited as new traders, for those that may have less than a year experience, I have about 6 years of experience. But given those emotions early on, you want to make sure you are trying to manage those and take into consideration the things I've mentioned that show us visually that we are in a potentially harder to trade environment. Because you want to know when to trade, when not to trade, right? And then how to trade in both environments, both high resistance and low resistance. Well, this is, on display in terms of how to navigate a high resistance environment. And how are we doing that? We are simply letting price speak, not worried about missing opportunities, because we won't miss anything. If we do miss something, we'll find a continuation variation of whatever model we utilize as price is printing to then engage. There's always those opportunities every single day, not every moment, but every single day. There's the initial move, and then there's continuations on the lower, 1 minute or seconds charts, sometimes even on 5 or 15 minute. Like if you were to miss a move down here, you just move up, move up in time frame. Or if you move lower, you just think about when price is printing in here, you just look for the sequence your model presents, like the run on stop shift in market structure, fair value gap idea, just in a moving market, targeting a high that's logical. So that's how you kind of navigate continuation variations. Same with breakers, same with optimal trade entry, same with every other style of models that ICT teaches. So yeah, I like this, right? Remember what I said about the first presented fair value gap and the overnight 30-minute plus the regular trading hours gap. Those are going to be significant. Okay, if we can get above them, that may be significant for us to, again, fall in line with the buy side, which again, that's what I've been favoring. That's what I favor. This whole move lower, I've told you guys that I was not considering shorts because of the risk of this. And just the simple fact that we are in high resistance makes this even more a possibility, right? So anyone that got greedy, that maybe took this and wanted to hold, thinking this was going to tank because they don't understand what's happening, most likely got stopped out, right? Or their stops above here and they're sweating bullets. Probably should have closed the trade already, right? So yeah, we see this delivery down, large delivery through this range, these fair value gaps overlapping, DXY declining, higher time frames bullish. This behavior should act as a balanced price range. We should not see price come down to the midpoint of this delivery here. If it does, my intention will be to target the rest of the new week opening gap. If it stays above this, obviously it's going to continue to support buy side delivery, and this first presented fair value gap may show as a launching pad to get us above these equal highs up here I mentioned at the start of the day. Right, so yeah, I hope that's clear. So we're going to watch how this behaves in here. See if we can get price to support that idea. Should not come back to the midpoint. Should be able to see it hold up if it's going to go higher here. Did a really deep dig into this London low, so I really like that. Plus this shift in market structure. Got a fair value gap. We got the new week opening gap here, so hopefully that can act as support. And then maybe look to get us up into the midpoint here. The high is up here and eventually potentially up here. The likelihood for price to get just stuck in a muddy range is definitely there because we're overlapping, because we've already taken a higher time frame level. So that's something you want to keep in mind. But yeah, if we're going to look to go higher, I would like to see this scenario play out in here. If we were to just, again, displace through the midpoint of this, then I would not be very confident to take a buy. That would signify that we may not be done targeting the lows, and we may end up seeing something frame out to attack the low here, then eventually down to here. If we take the new week opening gap, we could break this down, get a couple other supporting levels. Again, this overlapping behavior here generally can act as a balanced price range. So if that balanced price range idea fails, what is that telling you? That's telling you that you may be incorrect, right? It may go against whatever just took place that created the, in this case, potential balanced price range. I like that this has been created inside of this London low liquidity pool. If you guys were studying ICT's new model, not that you should if you already have a model that you operate within, but this here is showing me possible signs, if it is going to go higher, that this looks like the Venom model, right? Overlapping fair value gaps, price at least one candle close below liquidity pool in an environment that may look to want to go higher in this case. So that's pretty much what the Venom model is. It's just like a balanced price range created at a liquidity pool, in this case a low. But again, we're in a huge consolidation, so any likelihood for any models cleanly delivering are a bit less likely. These are the types of scenarios where precision is generally skewed. ICT has mentioned it as such. So yeah. So we're pushing real deep into that area. So again, this is not convincing to me that we are going to see any type of easy delivery to the buy side. Again, high resistance environment. So because this is the case, especially up until this point, your risk, if you do take an entry, should be cut to 0.75 of what you trade normally. If you trade 1%, you trade 0.75. Or if you're a very new trader, I would just look to tape read or cut your risk down to maybe like 0.5%. If you're a new trader, you shouldn't be engaging even demo. You should just be watching, listening to the things that we talk about, watching ICT's concepts, and studying, trying to get a feel for what processes you need to employ, from bias, narrative, risk protocols, when to trade, when not to trade, what makes high resistance and low resistance, how you need to operate within those, and then just really spending time on your model. All right, so yeah. Notice how we've hit pretty much this entire fair value gap. Still kind of respecting this. Still a bit shaky in terms of trying to make a decision. The fact that we got down here, if we do displace, obviously, I would be very confident that this lower portion of the new week opening gap will be violated. We're now getting back above this fair value gap here. So we want to keep monitoring that. And we are below the 3 levels that I've mentioned. So, that makes me really feel like, especially with this delivery, it makes me feel like we're going to potentially target the low. But we'll see. There's nothing in here I'm excited about. Other than that short that was up in here, that was a high risk decline, given our beginning observations and what DXY is doing. That was the only thing that maybe could have had a consideration. And right now, we're definitely blowing through this balanced price range. So we've gotten below this too. So let's see how price behaves here. It's nothing I'm interested in trying to engage. So, of course, that's my opinion. You're going to do what you're going to do. But, if you're taking my advice, definitely worth considering the perspective I'm sharing here, given what we see. So it's definitely having a hard time trying to get below that. Still closing above this fair value gap. which was overlapped by this. So the balanced price range, the wicks do the damage, the bodies tell the stories in every single situation. So we're going to continue to watch how the bodies are going to behave next to the midpoint of this area I've shown. But yeah, it's not overly convincing that it's going to hold. The longer we spend time at a particular level, the less likely it is to hold. Contrary to what people think who trade normal retail logic, they think that the longer something spends time at a level, the more strong it is, right? The way we view things is there's more liquidity being built there for a later targeting for a potential idea, right? Look at how almost perfect the bodies are closing at that balanced price range midpoint. So yeah, again, I'm still very much wanting to see these relative equal highs get taken. But, you know, there's nothing here for me to want to really be overly excited about in terms of buys. So, you know, it may displace. You know, if it does displace and gets above this high, great. You know, then I'll try to find something in there to target the high. I'm not looking to short here, right? That may end up in a missed move. But again, what we see here is very important to consider as far as, you know, knowing a time when you need to pause. Like, wait a minute, okay? We're in a macro, yes. What has that macro done? Absolutely not a damn thing. All right, so given the fact that nothing has even set up really, we've just kind of swept this high and came all the way back down into the balanced price range, the possible balanced price range. You know, there's no fair value gap. There's, you know, I guess you can make the argument that this again is an inversion, potentially, but you know, the likelihood of that working out, in my opinion, I mean, it could go 50-50, you know. I do like that we've held at this new week opening gap. Again, just to make sure none of you guys are confused, I am favoring something supporting buy side. If that doesn't come to fruition given the conditions, I'm going to need pretty strong evidence that we're going to go against that if I'm looking to engage opposed to that. It's just the way it is. Over the years, I've been able to accept, as you will, you know, there will be times that I will miss a move given the rules that I have, which are very strict. But that's what separates people that overtrade and over leverage and some that won't become successful versus those that will become successful. They accept that not every single second in the market, every time you sit down, is going to provide you with something very clear based on your set of rules. And if you're just taking trades outside of your rules because you're just excited and want to take a trade, that is not what you're going to end up doing later on if you want to be professional. And that thought process will be the exact reason why it takes forever, if it ever happens, for you to be successful and make the progress you're looking to make. Along with, you know, over trading and over leveraging, you know, those things need to be combated by rules. Right, so yes, definitely hanging around. So let's flip around again. So we got the Dow running higher here. Just looks like a mess. You know, what has taken place? Equal highs have been set in 2 of the 3 indices, and we've taken out all London's lows. You know, previous. Oh yeah, London's lows, and now we're just kind of hanging around. You know, it's DXY looks like it's still indecisive. You could see that from the candle delivery. And yeah. So yeah, you see the body closure at that middle portion inside this fair value gap I've been highlighting, telling you to watch. This is good, right? This is good for us to want to consider potential buy side delivery. It's just accumulating at this low now. That's what it looks like, right? When price takes a low or a high and it just hangs around, it's accumulating, right? It's bouncing back and forth, building the idea in both schools of thought's heads for buys or sells, right? And both of them are most likely sweating bullets if they're in there over trading and over leveraging, right? If they're like more of a swing trader, they're probably not even on these time frames anyway. So, you know, they probably don't even know that this mess is taking place. But yeah, for us, I'm a day trader. I trade the weekly range. I trade the daily range. It's kind of my style for those that may not know. I'm definitely trying to, push a little bit further into a more long-term style, as well as keeping my lower time frame style, so I could kind of have multiple things running at the same time eventually. It's not where I'm at right now. I'm just sticking to what I teach everybody, and what's proven to work for me, which is day trading and scalping. 20 or 30 points. If I get more, great. If I hit 20 or 30, generally I'll just take that. But yeah, so now we're getting right back below the fair value gap here. So that is not the type of delivery that is going to be encouraging for us to want to run higher. This started to somewhat give us a little bit of light towards that, but now this here makes me almost 100% less confident that we're going to end up displacing to the buy side. We are still in a consolidation, so that could end up being incorrect, and it could still look to go higher, but we're just dancing around. Just think about an entry, think about your model, and think about, if you were engaged in this, how would your mindset be right now? How would you be feeling? Given the fact that we anticipated high resistance right when we hopped on the call, I talked about how it's going to be most likely a harder condition and may look to retrace, but I am favoring these highs unless proven otherwise, right? So with all that being said, just think about how you would be feeling in here if you did go against that school of thought. You'd probably be like, oh man, I'm kind of worried. Unless you took this. But even if you took this and held too long, trying to be greedy, you would have probably been stopped out. Or you would have been in a panic when price came up here. And you'd probably be doubting whatever you're doing. That happens a lot when price goes against us. But yeah, so I'm watching this fair value gap here. Again, DXY is like beautifully delivering to the downside as I wanted it to do. We're just seeing that the indices are having a mind of their own, kind of going with this crack and correlation. Large wicks, the higher time frame is sideways, right? Very back and forth. These are all indications that we're in high resistance, aside from everything else. If you want to figure out what's an easy way for me to decide whether we're in high or low resistance, cracks and correlation. And when price is overlapping like this and not really moving at all, just really overlapping on the higher time frame, whether it's at the weekly time frame or if it's on the daily, or if you go to the 8 hour, 4 hour, see the same thing. Those are very, very easy, not complicated, very visual ways to identify whether we're in a high resistance or a reasonable low resistance trending environment, right? So definitely use that process if you haven't already. I see this large wick. Price is getting below that. So here we're going to take this one off now, kind of clean that up. This large wick here, if it's going to continue to go lower, should be respected in terms of the midpoint. If it retraces back into that, this is going to have to hold, and we're going to have to stay below this inversion and this big one too, for us to continue to maybe target this area down here. Because DXY is so aggressively pushing to the downside, it's not in any slow fashion doing this. This could at any moment, given the narrative on the higher time frame is bullish, this could at any moment trigger in a displacement because of simply how fast the DXY is going and what the correlation generally is. Like I mentioned, this could just be accumulating at these lows, which is why I'm not looking to engage any type of shorts unless, of course, we were to displace below this. That would be a reasonable indication, and then if we can get down below the new week opening gap, that would then put my attention to maybe the low down here or this fair value gap. We're at a second standard deviation for the central bank dealers range. For those that do know, for those that don't know, this is basically a projection tool. You could project standard deviations, which is basically just highlighting this, casting it lower here, here, like copy and pasting, and that gives you a projection to identify where power 3 can set the high or the low of the day, depending on what what direction price is going in overall. Yeah, so remember what I said. Keep in mind this midpoint of this wick along with this inversion fair value gap. Only time for me to consider potential buys again would require me to get above this high, because that would be a shift in market structure. Otherwise, this is going to continue to want to dive lower, especially if we see this bottom out here. Then we got this low. We have the 25 quadrant here. If you take the new week opening gap, break it down into 4 quarters, 75, 50, 25, right? This could also be a reasonable target if we do look to want to target sell side. So in this picture here, if it does respect the midpoint of this wick and continue this, and DXY maybe gives a displacement, if it was to go lower, we have the low here, we have the quadrant here, and then we have the rest of the new week opening gap. I'm not saying that that will or will not happen right now. We are still kind of sloppy. I would enjoy seeing this respected and then us displaced below this, then maybe get a retracement back into this large run higher, creating potentially a bearish order block, which may set us up to slide down into here. That would be the only time I would consider taking a potential short idea or framing one. This is, in my opinion, for me at least, it's not enough. It's too messy, so I'm not going to assume that it's going to just use this in low resistance fashion, deliver. And again, these equal highs up here, I don't like selling into equal highs. I don't like buying into equal lows. And you may ask why. Well, over the years, that's where the punishment has been. That, and then trading right at the open when there's a news event, trading before the open when there's no news event. Those are all moments in time where I have taken the most losses over the last 5, almost 6 years. Okay, so it's a little bit of insight in terms of my decision making and why. Sometimes I analyze things the way I do and say I'm not going to take a trade, or I am going to take a trade. Right? It's just a little bit of inside baseball, if you will. So yeah, this is a nice reaction here, but again, DXY has still not provided a run higher, so the Kraken correlation continues. So again, we're watching this level here and the midpoint of this wick, right? It has kind of dug a little too deep into that, but if it can get back down below that, again, it'll still be potentially active. We're also at the 75% level. Notice the responsiveness from that level, from this new week opening gap. Again, notice that we're spending a lot of time below the first presented fair value gap, below the first 30 minutes of the daily range, and the regular trading hours gap. Right, we're spending a lot of time below that. So again, if it was to displace from here, that is a supportive idea, backing up the idea that we're going to go lower, at least in this small capacity, to target the new week opening gap. That's simply all I would be asking for shorts. But again, I wouldn't be trying to engage anything in here. Just it doesn't align with me. Maybe it does with you, right? And if it delivers, amazing. I'm not 100% behind that. So that's my take on it. Again, I'm watching this high since we're now trading through these levels. My attention's at this high here. If it gets above this high, we can classify this whole move as a run on stops, possible shift in market structure. We have this run on stops here too. We're running back through these PD arrays, and then getting above this high would contest the first presented fair value gap. If it gets above that and just keeps showing evidence that it wants to go higher, again, that's in line with what I would like to see to try to frame out an idea targeting those equal highs up here. So yeah, hope all this stuff makes sense. It's easy enough to follow along with. Maybe for those of you that have less than a year, maybe a little bit more difficult. We can also see that this high here to this low, this creating a failure swing inside of London's low, may create something called the type 2 dealing range. So again, if it was to violate this high, it would probably in a low resistance fashion try to blow these highs out, given what I just mentioned. But again, we're in a consolidation, so we're going to continue to be very demanding. There's nothing in here that I would like to engage. Any type of short would require us getting below this low for me. I want more evidence. I act more conservative in conditions like this. Mind you, we've anticipated from the start that this was going to be high resistance before any of this took place, right? And then what do you know? The things that we mentioned have led to what? High resistance. We are building liquidity to the buy side, so that's pretty important. So if it was to displace above this high, then not only would be possibly presenting us with a type 2 dealing range, it may also set us up with a bullish breaker. If I could find... So this is another reason why I would be wanting this high to be taken for me to consider possible ideas unfolding. But again, even this, if that was to take place, if I took an entry using the breaker there, I would be at half risk. Simply because price is in consolidation. And, if there's some that don't like that perspective, then so be it. Do what you want. Okay. Can't save everybody, right? But yeah, so put that breaker there. Again, we got above this inversion. That's a beautiful sign. And we're marching back towards this first percent fair value gap. Notice the 75%, how we've stayed above that. It did come to the middle, but now we're giving a pretty strong reaction. All the indices seem like they are now looking to want to push a bit. So let's see what we can get as a delivery above this high here that may set us up with a reasonable opportunity with a bullish breaker. And then an entry, if you were to engage, not promoting you to do so. I'm not a financial advisor. This ain't financial advice. It's just my opinion. But if price gets above that, an entry, if it was to be engaged, stop would have to go below this or below, these consecutive candles, maybe even below this first candle that led to the decline that swept the low. I'm gonna look and see if we got any type of SMT. We do have SMT at the lows here. It's on the super low time frame, so maybe unreliable, especially because we're in consolidation. That SMT was presented inside of a macro, which is significant. Definitely go study that. SMT is generally present when we enter into a macro. So let's see what happens here. Again, similar to what I was talking about with this being a balanced price range, although it did kind of, get really deep into it. Let's go scrub up and see if there's any time. No, it's not. I was looking around to see if there's any higher time frame that just showed a wick versus a body. But yeah, the delivery lower, taking the stop, then a quick delivery, overlapping that, getting above this swing high here. Again, if this is a breaker, it should be, it should allow for this to act as a balanced price range as well. So again, there's a reason that if you entered a breaker, your stop goes below the breaker candle or below the middle portion of the breaker pattern you identify, because breakers create balanced price ranges. That's why, they're pretty damn effective. Same with order blocks. For those that don't know, it's what those things are. They're not just patterns. They are a sequence of events that create specific things that have a specific operation that they're doing. And that operation, as far as I understand, is a balanced price range. That's why they are so impactful. So now that we're above this, that is pretty nice. I like that. See if we can get price to give a retracement back into that. If not, and it just continues to smash, then so be it. The move was just missed, and I'm totally fine with that. It has done exactly what we've outlined the last 20 minutes. The risk of price faking out and just accumulating to go higher, obviously, seems as though it's in play. Nothing really going against that so far. Again, we have layer liquidity here, 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 equal highs here. right there, fair value gap, and then above that, we have this initial target up here. And again, the second standard deviation I mentioned is down here from the central bank dealers range. So that's, you know, being respected, so that's good. I like this right in here. See if that can be anything meaningful. So DXY is still promoting that it wants to attack sell side. Got this little retracement in here, got a fair value gap, got this breaker. So again, I do not want to see if this breaker is going to be effective and this is going to be trustworthy. I wouldn't want to see us dig or spend too much time inside this little area. It should be able to give us a pretty strong run, hopefully. But again, the risk in this type of environment, even though there's something we've identified here that's starting to make a little bit more sense, be a little more clear, although that's the case, we are still inside of a consolidation environment, indecisive, overlapping, high resistance environment. So you got to consider that when you take entries. Even if your pattern shows up, even if your model's there, depending on what the environment is showing you, that'll determine whether it's going to be a smooth ride or if you're going to have to endure, you know, high resistance like this, right, back and forth, slowly gravitating, you know. And a lot of times new traders, they don't have the mental confidence to hold those types of things. And again, that's nothing to beat yourself up about if you get out early and whatnot and you're new. It's just part of the game. It's part of the growing pains. And you want to embrace that. You know, you don't want to beat yourself up for anything unless you're willfully over trading, because that's something that it's never going to be good. Okay. So it's never okay to do any over trading. I don't care what you think, what you believe, who told you what. I don't give a shit. You know, pretty much all of us have probably learned that through experience, that over trading, although we think more equals more, it actually equals more risk instead of more potential opportunity. At least, you know, when you're new. Even when you're seasoned, you don't want to overtrade. It's not professional. So yeah, let's see what's happening here. See, I don't like that. It's not something that would be something I would like to see. Again, this is the high resistance nature of what we're navigating right now. Got a displacement here. Seems as though the other indices are definitely looking to push against any type of run higher or lower. So again, this breaker needed to hold above the midpoint there. Since it did not, that is a problem. Right? So now we got run on stops. Again, relative equal highs. Even if this is going to short, I'm not interested. I don't like equal highs being set and then price just attacking inside of a consolidation on top of that. Right? So yeah. See what happens here. We don't want to spend much time in here. We want to get above this fair value gap. We want to see a strong move, considering that we swept the low. Big moves, meaningful moves, generally come from stop hunts. Right after. Go study that if you haven't already. Watch how many times a big move takes place but required a stop run, whether on the lower time frames or on the higher time frames. It's a very common thing. Now I can tell you, if this breaks through this low to that high will most likely not be traded into, right? Because this here may set up a bearish order block, but I'm not getting behind that idea. I'm still confident that we're going to go higher, at least for now. I don't like that we came back below this. Stop for an opportunity in here would be below the breaker candle low. Obviously you'd still be surviving, probably sweating though, but we'll see, right? And it doesn't have to come up there, right? It doesn't have to do any of this and come all the way up here, or target these lows or the low of the new week opening gap. We're inside of a consolidation. Okay, so it could not do anything at all, right? For now, though, this breaker idea seems to be working out still. We just really need to get above this first presented fair value gap. If it does that, then I'm definitely building more confidence that we're going to target even higher. This is an opportunity that I did engage, right? Engaged it right up in here. Stop is below there. So 28 point stop. Oh, wait, let me see. Let's see how big the stop was. It's a 19 point stop actually. So entry was up in here. So I'll show you the, let me pull that up real quick. Just to show you that I'm engaging even when things may be somewhat sloppy. Notice the amount, right? The amount is very, very small, very insignificant. So if a loss does take place, I'm not worried about it. I anticipate these are the types of days that I would take a loss. But we'll see. Model showed up. Enter with no fear. If that requires you to cut your risk, so be it. For most of you guys, you're going to have one micro contract. There's no need for more if you're brand new or still just trying to figure things out. There's no you shouldn't be ashamed by that or anything. So I did just get stopped out. So $37 loss, as you guys saw. And so with that being said, I will continue to wait. But again, like I said, make sure that you are not ashamed of having lower lot sizes. I get a lot of messages every single day talking about people beating themselves up because they have to use one micro, or they're scared to use one mini contract because it's $25 per point for the Nasdaq. While they're still asking me questions, very basic questions about the concepts. That's not where you should be at this moment if that's the case. If you have to use such a tiny amount of leverage because you're panicking, you're not there yet, and you got to be honest about where you're at. Otherwise, you're going to put yourself in bad situations. I used this analogy earlier with my my private community, a couple students in my private community. If you're new and you've never traded live before, you're just starting, maybe you got a year of experience under your belt, and you're still confused, still trying to figure out the process, but you want to go in and trade live. That's like you not even having a license, being 15 years old, trying to get behind a Ferrari and push the speed limit to 200. What do you think is going to happen? The concepts here are Ferraris, Lamborghinis, whatever car you like, because they're amazing. Even when they don't work, it's okay. Nothing's perfect. But these are amazing tools, and you got to know how to use them. And a lot of times people fail with the tools early on because of themselves and their lack of understanding. Right? It's not the tools, it's always us. And then if we could keep that mindset and just put into perspective, like I just said, you going in and trying to trade live with 1 year experience, thinking you're going to be a millionaire or any other type of stuff, and you're over trading, over leveraging, and all these things. That's like you not having a license, never drove before, getting into a Lambo, trying to put the foot to the gas. You're going to crash because you don't have any experience with the steering wheel. You don't have any experience with changing lanes or merging to a freeway or whatever. And you're just asking to be hurt when you could just simply wait it out, focus on the basics, get around people that, show the realities like we do, right? I just showed you guys I took a loss. That's fine. No one's concerned about that. We talked about the conditions, right? So through everything that we've talked about, especially today, it's a very valuable perspective. You're not going to be perfect. I'm not perfect. I have shown a statistic in the free Discord in my private community that from the last 40 days, our hit rate has been 85%, which is pretty insane. All right, let me pull that up for those of you that didn't get to see it. And then of course I've been, every 3 months I'm showing percentages in terms of what the percentage is. Just for those that want to make sure that you're talking to someone that knows what's going on. If I could find it. Yeah, we're getting back above this fair value gap before I lose focus. So yeah, this just looked like it was a stop run. But again, look at how choppy this is. I'm not interested in trying to push, especially because this opportunity here failed at the breaker. There's no need to try to push. Yeah, let me find that thing real quick. I haven't looked at the comments. Okay, again, if you guys have any questions, just let me know. Let me know if you engaged today. What did you engage? Did you take a loss? Did you take a win? How do you feel about these conditions? Let me know in the chat some of your thoughts from this morning. Maybe if you have an opinion on some of the things I've said. I would definitely enjoy going back and forth with y'all. Go find the... days, winning day percentage, 85%. Right? And mind you, the pictures and images and things that are shown to, kind of give validation to certain statistics, that's one thing. But, if you don't believe that, just hop on and see how often we call the market. And that will be blatantly obvious that almost every single day things play out. Unless things are consolidated like this, obviously that'll skew the information, right? It may be the days, like you saw, I took a loss. Those are the days that are less likely. Not that every single time it's like this do we take a loss. Even in times like this, we've provided evidence from the last 3 years that generally things, if they are provided, if they show up, we're able to engage and identify it. Which, it's kind of what we're doing right now, trying to observe and see if there's anything that could work out. In this case, at least for right now, the first presented fair value gap here is being held. We're still below those 3 levels I've mentioned: regular trading hours gap, first 30 minutes inside this consolidation, and the New York first presented fair value gap. So continuing to hold these levels will continue to apply interest to go lower. Right, price ran all the way up into here. Right, it started contesting those levels. Plus we had a bullish breaker, so of course I used that. It resulted in a loss because, it's just the environment that we're in. And, it's kind of just the way it is in consolidation. Now, this could simply be a paper cut, which is what the mindset I've been talking about will allow you to have, is just a paper cut. Or it could end up being a total day that destroys your confidence, completely obliterates your funded account, personal account, any type of confidence that you've developed over the last year, 6 months, 3 months, in the last week, right? These are the environments that you're going to do the worst in. Maybe you'll find that may be different for you, right? You'll never know until you build experience. But for the most part, like 99% of people have a hard time in these environments. And no matter who you are, no matter how good you are, even ICT has admitted himself that these are the moments in price when it does this, that his precision falls off a bit. He may be able to go in, take a loss, and make it back later throughout the session. But for the most part, the risk is elevated. So unless you have a good amount of experience, your confidence is unwavering, which comes through experience, just seeing things play out and, building that trust behind your model. Unless those things are something you can say you have, it's best to, if you take a loss, get out. Or just don't take a trade at all and study whether your opportunity was going to play out. And then just bank that in your bank of experience. A winning trade always is going to be tape reading, and deciding when you see moments like this that you're just not going to take a trade. That's a winning day. taking a loss like I just did in front of you guys provides me even further evidence why I personally keep my risk low. It justifies the risk protocols that I use. I could have went as far as just not engaging and doing what I just mentioned to you. But, we kind of pushed up, and I thought, why not? Just toss an entry. It's not going to affect me if I win or lose. If it played out, right, beautiful. If it didn't play out, as you can see, the things we've talked about are great lessons. And it just shows that I'm not perfect, and neither will you be. You'll face losses. You'll have to overcome them. And if you manage risk properly and, follow your rules, do the right things, and like I mentioned, build more experience, maybe you'll be able to develop unwavering opinions and confidence fairly sooner than most. But the best way to make it so this takes a ungodly amount of time to learn is by breaking rules, not listening to people that give good advice, whether it's ICT or anybody else that's worth listening to. If you just decide that you're going to be stubborn and not listen to this good advice that's meant to help you, you're going to be told by the market that you should have listened. And the market has no interest in caring about your feelings. Okay? Most of you guys have probably known that, right? So now we're breaking back above this first presented for value gap. So again, that is something I want to see to continue to want to target our initial idea, which is the London's high. It's a little too sloppy. This sloppiness a lot of times will turn to low resistance in some cases. It seems like that may end up being the case here. We'll see. It's a little too foggy, right? Too much Kraken correlation, too much nonsensical stuff taking place. So I think I would like to see structure on the higher time frame, like at least a 5-minute, give us an indication that it's going to want to continue to push. We are breaking above this high, so that's something I like. Trying to see some S&T if it's present on this time frame. So we do have S&T at these lows here, and price is now giving a pretty strong movement now. Notice how it held for so long, then all of a sudden it's just like, pew, right? So yeah. So the idea that price was going to go higher, as you can see, was a correct opinion. The issue was, for one, the timing. It was outside of a macro, and just the condition itself has, it's been unforgiving. It's presented certain ideas, whipped against them, took them out, then started again, but then it came right back again. Then it, did the same thing over and over, tested another level, then returned back, and then now all of a sudden, out of nowhere, while everybody else is confused and losing their mind, price is now displaced, aggressive, and now got back above the first presented for value gap. Seems as though we're going to now look to run up above the regular trading hours gap. This could be a consideration here to watch. So let's watch that for value gap. Mind you, this is the 30 seconds chart. If it hasn't even came back in the 30 seconds chart to get into there, there's most likely not going to have been any opportunity set up on the other time frames either. So the idea of that type 2 dealing range I talked about, the high here, low here, failure swing here, running up above this fairly quickly, that obviously it's a reversal idea. It's a dealing range or range of opportunity identifier. There's 2 of them. This is one. We talked about this on the higher time frame for the Nasdaq for the last couple weeks, and it's kind of supported our assumption that price is going to continue to go higher, along with everything else that we've talked about for weeks. That's supported buy side. So you could see it's also showing up here on the lower time frame as well. Okay, so with that being said, again, I'm watching this for value gap, see if that can be the catalyst to possibly get us to run through the buy side here. Okay, we're still in a very high resistance environment. So any entries or ideas would be at half risk, or if you took a loss like I did, I would encourage you to sit back and watch. Let's watch what takes place here, and see if this opens up and then ends up targeting our buy side liquidity pool. DXY has came back, used the weekly fair value gap as an inversion. All right, so right up into it right here. That's what this purple line is. All right, if we go look, weekly fair value gap, so low. But again, we're going to continue to study how this is going to deliver from this fair value gap in here. See if it can offer anything worthwhile. Again, we're back above the first 30 minutes range. From the open, we're above the first presented fair value gap. If we could stay above these levels, that's supportive of price continuing to march in that higher time frame narrative, which is bullish. So yeah, we're going to see if that's going to be something reasonable to study. We do have this delivery from this high to that low. Quickly got above, so this wick overlapping this lower fair value gap should afford support, right? Should allow for this to be supported if it is going to go higher, right? And again, we're still in consolidation. So these are observations that are inside of a high risk environment. I got to be transparent with it. I can't come out here and just lie and say, yeah, I'm 100%. Like I'm perfect. It's going to always take place. It's unreasonable, to have that, especially in environments that promote, possible harder, less reliable conditions. Anyone out here saying otherwise, in a condition like this, they're just trying to hype you up. I'm not here to hype you up. I'm here to help you. I'm not here to build an image of being perfect. Again, I'm here to help you. That's the sole purpose. Only reason why I've been going live every single day on YouTube. I could just be in my private community. I could just be away from them too. Just be doing my own thing, as I was for a decent amount of time. But it just pisses me off how many liars are on the internet. So I thought, I can do this. I've taught people before. Might as well hop on and see how many people I can help. And students like Tony and many others have been doing pretty amazing. So it's proven that my time has been well spent. So yeah, pretty nice delivery here. So 30 points would be just above the highs up here. 20 points is right at this high. So that's a reasonable study target. So yeah, you guys have any questions? What are those arrows? A bit distracting. So those arrows, you're talking about these black and blue arrows, those are just fractal identifiers. It's just a indicator that I used early on when I was trying to be able to identify or master the identification of fractal highs and lows using the 3-bar pattern ICT teaches. Because if it's not a fractal high and you're looking at a high or a low, trying to identify whether it's important or not, if it's not a fractal high with 3 bars, it's not a valid high or low to use. Especially when you're trying to map out a significant most recent swing low to a most recent swing high that's actually valid for your fib, to gauge your range and navigate whatever. Even for premium and discount, it's important. But if it's not one of these 3-bar patterns, right? 1, 2, 3, with the higher high in the middle, lower high to the left, lower high to the right. Or for a swing low, it's a lower low with a higher low to the left, higher low to the right. If that 3 bars is not there, that swing low or swing high is not worthy. It's not useful. It's a random high or low. And it's, in the grand scheme of things, not going to be as helpful as it could be if it was a fractal high or fractal low. So that's what this indicator identifies. The 3 bars. Some people use 5 bars, but it's been taught that if you catch a swing high or swing low using a 5-bar pattern, you're late to the party. And, you know, it's incorrect. It's not the right way to look at fractal highs and lows if you're an ICT trader. I'm sorry that it was distracting, Supreme. Of course, I know how to identify this stuff. It's just kind of here for nostalgic reasons for me. I used it and it was so helpful to me, and I got so used to it that, you know, it's always just hanging out. And I'm probably not going to take it off because it just reminds me of where I came from. You know, the tools that helped me get to where I have been able to get to so far, which obviously I'm not exactly where I want to be, as is the case for most of us. But I've made leaps in the last 5-6 years. And, you know, I'm exactly where I would have wanted to be in the specific time if I was looking at, you know, the future when I was, you know, first starting out. Of course, we all want to get to our goals in a week, right? And do all these things that we aspire to in a very short amount of time. But, you know, trying to learn how to be a trader is like trying to get a PhD in some engineering subject. You know, there's so many things you have to get used to, so many personal things that you have to overcome, so many mindset adjustments and perspective shifts and technicals that you have to master, and conditions in the marketplace that you have to navigate and get used to over time, that it's impossible to learn this in a year. The technicals can be learned from what ICT has mentioned in about a year or two. Using those technicals and mastering your mindset and getting comfortable with certain conditions, because there's many in the market, those are the things that take forever. You know, those are the things that create more difficulty because you have to adjust. You have to figure out how you adjust, when to adjust, you know, what's right, what's wrong, you know, when to trade, when not to trade, all these different things we've mentioned today. And those are the things that take forever. That's why it's unrealistic for anyone to think that they can master this in a year or two. You know, mind you, some people learn faster than others. I have some students in my private community that started off, were like 3 months in, and then, you know, 11 months later, they're already trading a personal live account, funded accounts, crushing it. You know, one of those is a student named Harley. You know, he is spectacular, and I always have to give him his flowers because he's progressed faster than anyone I've ever seen, including myself. And, you know, went pretty quick. You know, it takes 10 plus years to, you know, master themselves, let alone the technicals. You know, so it's kind of just highlighting the importance behind the things that we show. Of course, everyone's different. That's not something to use as a comparison to steal your joy or think you're less than. It's just something that just validates what I have been teaching as a mentor, and just really provides evidence that what I'm teaching is truly transferable and it's truly helpful. There are important aspects in the market, and, you know, a lot of the stuff I show here on YouTube, you know, some students want that more intimate support. So, of course, that's always available. But, you know, students like Harley, students like Tony, students like, you know, this other student that hops on from time to time on YouTube named Nutty Fafa, you know, and then many others you can go see on my Instagram highlights. You know, they just show that, you know, this stuff is workable, it's doable, and again, it's transferable. And it helps me know that I'm able to transfer this, because that was the whole goal when I first started trading, was to be able to help my little brother, to be able to help my daughter, or anybody else that I care about. And, you know, just seeing students like them progress off of spending time with me. Of course, lots of credit, you know, much of the credit has to go to ICT, because without him, I wouldn't have been able to learn, because he's the only one that I learned from. And it was difficult. It was so hard because he's somewhat complex at times. So I had to dumb it down for myself, these complexities in the marketplace, based on his lessons, to make it so I could understand. And that skill set that I've used for myself turned into me also sharing it with those that want to give me their ear and listen to what I have to say as well. You know, so, you know, there's a lot of new students that have joined, like Muhammad, welcome, my friend, welcome. Freddie as well, who mentioned earlier that he's new. So I appreciate your guys' time and interest. And, you know, you're going to learn a lot being here. I can't ever guarantee profitability or anything like that. Nobody can. But what we do works out. Not perfect. Today wasn't perfect. Like this idea here, right? If that was something engaged, it would have ended in a loss. But this is just the type of environment. It's not perfect, but it's effective anywhere from 75 to 80%, which is amazing. Or 75 to 91% in the last 3 years, which has all been shown publicly. It's not just me saying that. So yeah. So now we're inside of a macro, another macro. Right, so we'll see if this was just a stop run, returning back to this first presented fair value gap. Muhammad, you followed me on Instagram too. I do encourage all of you guys that haven't or don't follow me on Instagram to go do that. I post a lot of ICT snippets and, of course, my own little snippets here and there. But that channel or Instagram page was made to basically document in a fun way the things that I listen to on a regular basis. Every week I'm listening to an ICT Twitter space or some lecture that he talks about psychology on. I've done that for, since I started learning ICT concepts years and years and years ago. And I just, figured that the things that helped me, that were helpful to me, I might as well just, mind those, make them into a video and share it with others. And, I've gotten a lot, like even Muhammad, right? He's given me a good opinion on that page because it's literally made to be a complement to what I do here on YouTube. From technicals, and you go to Instagram, you could find a ton of psychology and different things that I highlight. And of course you could see testimonials and things from the past, lots of results and stuff like that. It can help verify me as the trader / mentor for some of you. So it's definitely something you want to go consider following. I post every single day. Of course I do this twice a week. And yeah, I'm just always thrilled to see new traders hop on because I know how helpful this stuff is. I don't sit here and brag or do anything. I don't show, my big, huge, massive days that I have because it's not going to help you. And sometimes it's discouraging. I know it discouraged me to see people knocking down thousands of dollars a day or a week, and I couldn't even make $20. It hurt my mindset. So, knowing that, I made a promise to myself that I wouldn't do that. I do it 3 times a year. I've already done it twice this year. The next time I will potentially show, like the financial aspect of things, like the big gains, maybe 1 or 2, will be in November of this year. I do January for the most part, February, and then November for the most part. I do that type of stuff. But it's not a focus. It shouldn't be. That should not be why you follow me, right? Or anybody else. Oh, they showed this or that on social media. They made this or made that. That doesn't mean anything. If they're not out here able to do this, and you could see both sides of them being wrong and them being right live in front of you. If they're trying to sell something to somebody or sell that they're like this great trader, but they can't get on and do this, it's not worth risking it because there's so many idiots that take advantage of people. So many stories that I've heard, let alone my own stories of being taken advantage of, that it's just not worth it. If they can't come out here and provide evidence over the chart live in front of you, it's just not worth it. There's more than enough people that can be validated that way. From myself to other ICT traders. A side note, it's pretty funny how most of the traders that do this, that have that option to watch them live, that are actually profitable, that prove it, are most of the time out of the camp of ICT. It's pretty funny how most of the record holders on most of these funded account places are ICT traders. It's pretty funny how one person, I forgot what his name was, something Miller. It's pretty interesting how an ICT student makes it in the top 10 in Robbins Cup as well every single time Robbins Cup comes out. His name is Jay Miller or something like that. Something Miller. I saw ICT mention it last year, and he gave him his props. He's there every year. But it's pretty interesting how that's the case, yet there's still dumbasses on social media calling these concepts a scam. So, it really highlights the intelligence of some of these people. but or the hatred in these people's hearts, which is pretty sad. But that being said, you guys are in the right place when it comes to ICT concepts itself, and I hope with your time with me, some of you new students, you can discover that this is a home for you as well, aside from ICT. But yeah, so price has been very unforgiving today. We'll see. Right, DXY is still declining, so nothing in here is providing evidence that it's too interested in not going higher. It does have a more interest, I would say, in consolidating, just kind of building sentiment on both sides. So I wouldn't take this as an area to buy. It's not something I'm super excited about. We do see this wick, so I'm watching this wick. I'm watching how we behave inside this fair value gap. I am considering where we came from, which was the new week opening gap in here, and we're above this fair value gap, so that's something I'm definitely keeping in mind. So let's watch and see if we could just sweep that low one more time, and then see if it can maybe displace, get us back above this level. If not, right, if we do get displacement, my attention would go to this layered trendline liquidity we left from earlier. I'm not sure at this current moment, given the consolidation, whether this is more likely or that's more likely. These equal highs from earlier. Now if we continue to start to spend more time down below this level, the first presented for value gap, the overnight first 30 minutes, and the regular trading hours gap, we had a pretty strong response from here. So, getting below this wick, if we stay below this first presented for value gap, if it is going to go lower, we should not see the midpoint of this disrespected, right? This wick overlapping this fair value gap, plus this up movement, down movement being overlapped, staying below the first presented for value gap, overnight first 30 minutes, and the regular trading hours gap, all that stuff should indicate that we're going to end up targeting the low. And like I said earlier, as a possibility, maybe fill in the rest of the new week opening gap. So again, if this is going to go lower, it should not retrace too deep into this wick. We should see a fast move if it's going to be anything worthwhile to try to target sell side. And again, that has to remain while we stay below this, this, and this. So this whole process is what ICT calls building a narrative. This is like my style of building a narrative. Obviously, it's all concepts that he uses. I don't use every ICT concept. Neither will you. Nobody else does that. Okay, you see people using specific things that were taught by ICT. If you go to my free Discord, there's 10 different categories of process/skill sets that will need to have an answer to if you're going to decide that you know what the hell's going on. And there's different ways of doing the same things. Like each model is generally getting you to a very similar area. The bias and narrative idea generally is non-negotiable for many things. Notice how what I said, right? The wick, if it's going to deliver, it should deliver quick, not return back into that. That's what's happened. But, you're not going to use every ICT concept. You're going to use certain things that answer certain questions, from entry to risk management to verifying a particular idea going higher or lower. And what else? Targeting, right? There's certain liquidity pools you'll want to use. Specifically, I use previous months highs and lows, weeks highs and lows, days highs and lows, session highs and lows, 1 hour, 4 hour highs and lows. What else? Did I say session highs and lows? Quarterly highs and lows, depending on where we're at. New week opening gap, regular trading hours gaps, new day opening gaps. Now, of course, this year, ICT presented the first presented for value gap, so that's easily pluggable into any style of trading. So that's an important liquidity pool to help validate, plus sometimes acts as a target. What else? You want to understand premium and discount also. Ranges, how to navigate the ranges. But in terms of liquidity, the list I just gave you is pretty to the point. It's not exhaustive. We also, of course, talk about the validation and invalidation principles here using 3 PD arrays. I talk about that on a regular basis. Bias and narrative, we talk about that process every single Sunday. Of course, we go into Tuesday with that behind us. I'm still considering having a second day for going live on YouTube. Still trying to work out that scenario. But yeah, there's ways to make this very systematic, and that's, if anything, pretty much what you get when you're here on this YouTube channel spending time with me. You get process, very organized process. You get live trading, realities of trading. You get transparency. You get to borrow my experience. You get to ask questions. Obviously, all of that stuff is amplified a bit further when you join my private community, but not everybody needs to join that. I'm not encouraging everybody to join that. I like it being exclusive to students that are just kind of similar to me, freak of nature, like they want to know everything, and just need a little bit more support to get them there. But again, you don't need everything. Again, like I mentioned earlier, I have a lot of students that are just crushing it and getting a lot of benefit and help just from my YouTube channel. So whether you do or don't join the private community, just depends on what you require. If you require more help, more one-on-one, more live trading, instead of 2 days a week, it's 5-6 days a week in my private community. And then of course you get to be around students that are becoming savages, not just myself. You get to see the fruits of what it is that we teach, and just how effective you can be as an ICT trader. And you don't have to be ICT to get there, and you don't need every single concept, like I said. So those are some of the things you get here for those that may be new. I just thought I would mention that, because a lot of people don't know what to expect when they jump on someone's live call that they've never seen before. You may see me call the market here and there, but there's much more than just daily bias and narrative. There's much more than just taking executions and knowing when to trade. There's much more, and that element of much more is what you get here. And then again, amplified and more personalized in the private community we have. So just wanted to make sure that is known for those of you that are new. And again, I just want to remind you guys, if you do support the channel, and appreciate the things that are provided here, if you could do me a quick, big favor, if you could like the video, subscribe to the channel if you haven't already. And, if you have any friends that like this type of content that could provide value themselves, or, get value from what it is that we do, what we talk about, definitely invite them over to come and join us, to hang out. It's, definitely something I encourage you guys to invite good people. It's more of a tight-knit family of traders if we have a lot of people that know each other through word of mouth, versus me just doing a bunch of stupid ads, which I'll probably never do. Word of mouth is a lot better. The community is more tight-knit. Everyone is more, they're more close. It's more of a natural environment. And we get the right people when we do it that way. Because people just like you guys that spend hours with me every single week, that chime in, that provide value, that keep us updated, that ask questions, that constantly engage, and are implementing the things that we learn, or the things that I teach and that you guys learn. Those are the types of people that this is for, that my audience is for. It's not just for everybody in the random masses that just, maybe want signals or something, because this is definitely not a place for those people. So yeah, it's greatly appreciated if y'all could do that for me, like and subscribe and share. But yeah, so we can see how this first presented fair value gap is now being traded below. DXY is kind of still being a mess, kind of back and forth. It's kind of been the vibe throughout the whole entire morning so far. It's kind of pushed past the time in which we generally like to find an opportunity. Price has just been, very sloppy. It's been a mess. It has not given us anything worthwhile. So, these are the types of environments will blow your account. So again, although you may look in this and in hindsight see, oh yeah, well that makes sense potentially. Real time, you got to be honest. Like I said earlier, you want to be very honest with yourself when you're analyzing your perspective. You don't want to be living in a rose-colored glasses type of world, thinking everything is just peaches and sunshines and rainbows and fruitiness, sweetness, I should say. A lot of it has to do with taking gunshots, sometimes. But if you manage risk, it's not going to be too aggressive in terms of negativity. It may be frustrating at times, but it's just part of being a trader. You just have to realize, why are you frustrated? Are you frustrated because it's not moving fast enough? Well, that is the wrong way of thinking. This is a long-term game, and until your account size and access to capital is big enough for you to make enough money off of low risk, you have no reason to rush yourself. Because if reality shows you in your circumstances that it's going to be a little bit difficult to get large amounts of money, like at least $5,000 or $10,000 to put in a personal account. More obviously is preferred, which is why a lot of people use funded accounts. But until those things are in order, you have no reason to rush yourself, especially if you're new, because you have lots of things to learn. Just because you get on the chart on the computer and you look at price and you're making these decisions, doesn't mean that you're owed any type of opportunity. The model doesn't owe you anything. Nobody owes you anything except yourself. So you want to make sure that you are having the right mindset. You want to be very much focused on a year from now, 6 months from now, 2 years from now, 5 years from now, because for most of you guys are really young. So 5 or 10 years down the line is really nothing in the grand scheme of things. And if you could just take that time and be patient with yourself, this will be a lot more enjoyable. If you focus heavily on learning and getting around people like this, or places like this community, or anybody else that you see on social media that proves themselves in the ICT community, the more you get around those people, the better you'll be. You know what I mean? 3 more days until Tony gets his first real payout. I mentioned Tony's name earlier. Tony right there is one of the students that has been with me almost from the very start of me going live faithfully. This is the first year that I've went live faithfully. Generally, I've went here and there live on YouTube, but it's been the last 3 years in my private community that I've just been live 5-6 days a week, unless something came up. Right, so Tony's been here and seen things from the very start, and he's listened, he's implemented the things that we've mentioned and talked about, and took the advice I've given him, and he has been doing fairly amazingly. And his progress is, again, just another testament to the things that we do here, and just following the rules, being reasonable with yourself, having the proper perspective, managing risk properly, and amazing things happen. So yeah, Jade Cap. Yeah, Jade Cap is one of them. Muhammad, sorry I missed your comment. Jade Cap is definitely one of the ICT veterans that he had a pretty heavy impact on, because he's from the private community too. From ICT's private community. So he's a charter student as well. So him and a couple others. There's another one that I can mention named CJ Trades. He's also another charter brother. Amazing individual. He's also live. Definitely give him a follow too. I'll never shy away from shouting out people that are worthwhile, simply because of the fact that there's so many dumbass liars that make me sick. Okay, that just sell courses and all this nonsense. They can't even give people the courtesy to come out live and prove that they're even worth listening to. And it's unfortunate, really. But yeah, Jade Cap is definitely an amazing trader. A lot of the elements that he uses, it's a commonality between a lot of us that trade ICT concepts consistently, that certain concepts will overlap, like Power of 3 and market maker models and higher time frame framework, and paying attention to certain things over others. Once you're in the know, you're in the know. And there's very strong similarities. Of course, things vary when it comes to execution and risk and how you operate in that regard. Some perspectives may be different as well. But that's the beauty in ICT concepts. You don't ever want to have that taken from you in terms of the customizable nature of ICT concepts because you're listening to a mentor. If they're trying to shove you into one way of thinking, they are doing you a disservice, because what works for them may not work for you, but they might be so convincing that you think that's the only way, and you'll be, manipulated into the wrong thing when you could have simply just had your mind open to other ways of doing things within the same concepts, and probably would have been better off. So being here, that's another luxury you get. There's a reason that I operate the way that I do. I point to different things. I don't always just say, hey, this is an entry and this is where I'm going to engage. I say this may be an opportunity here for this model. This may be an opportunity here for this model. And I mentioned multiple things because I'm multi-versed. I have 4 models I use, but I can see many other models. So when things are available, I like to point them out. But I focus generally for my own entries on one aspect. Today was focused on the breaker. I pointed that out. For those of you that trade the breaker, it'll fit. For those that don't trade the breaker, I talk about different things like, balanced price ranges. I talk about, fair value gaps in certain regards with the large wick overlapping. I talk about the YouTube model. I talk about, many, many things, market maker models, like I mentioned. So wherever you fit, that's where you want to continuously try to press into when you're listening to me. And then maybe me mentioning so many different models over time and, letting you get a taste of different ways of viewing things and different examples of different ideas that lead to positive results. Maybe that'll rub off on you and you'll end up being multi-versed as well. But it's not necessary. Okay, it's not mandatory that you have multiple things going on. You only need one model for the first 6 months to a year. You should be focused on one model. And then after that, once you feel comfortable, then you can move on, right? Preferably 6 months when you find a model you're trying to study or test. 6 months is minimum, for me, minimum. All the 4 models that I've used, it took me 6 months on each model. That's breakers, that's market maker models, institutional order flow entry drill, and then the YouTube model. I see that some things ICT is talking about in terms of new models like the Venom model, it corresponds with, or correlates, I should say, with ideas like the balanced price range, right? Because, the Venom model is technically just a stop hunt when you have a bias, and let's just assume that the bias is bullish. You see a stop hunt below some type of low that closes with at least one candle below, but overlaps fair value gaps like this, and then it comes back and respects the fair value gap that's in this area, and then just takes off. Obviously, assuming that you have a good idea of where the price is going to go inside of a timing element like a macro, right? Inside the New York session, right? And especially if you could find it at a higher time frame PD array as well. That can also add fuel to the fire with the model like the Venom model. But it's very similar when it comes to the other models as well. You always want to have a higher time frame framework. But things overlap, you know what I mean? So I've been mentioning that too because some students like that model. But it's it's a name for something that is essentially just a balanced price range after a stop hunt when you have a particular directional narrative that's in line with the higher time frame inside of a timing element, right? Timing elements are important across all models. Okay, so and again, if anything that I just mentioned or anything that I ever talk about, for those of you that are new or even those that have been here for a while, if there's ever anything that I'm talking about that doesn't make sense, you can simply interrupt me in the chat and I will stop and I will go back. I have no problem in doing that. Some mentors have an issue with doing that and sometimes wait to push questions off towards the very end. Given the viewership currently right now, it's manageable for me to cater to you guys in that way, which is obviously the most effective way to do things for those that do get confused. Maybe eventually that may not be the case. Maybe I'll have to wait till the end eventually as the channel grows, if it grows. But for now, simply interrupt me, send a chat, like a comment. Don't spam any one thing. Like I had a person hop on demanding signals, demanding me give him the bias on an asset I wasn't even talking about on Sunday, and it just blew me up with like 1,000 go, hurry up, listen to me, like all this nonsense. So he got blocked. Okay, so it's one rule, I guess. You could say whatever you want. You could criticize or ask questions, but if you spam, you will absolutely be blocked. This may not be for any of you guys viewing right now, but for anybody watching the replay potentially, again, that's like one rule I have. You won't be blocked for things you say. I don't care. It could be anything, criticisms or anything else, but spamming is not cool for anybody else, not just me, but anybody else. Because a lot of stuff is valuable. A lot of students have mentioned things in this community, including my private community. Sometimes they hop on and they mention some very important stuff to add on to what I'm saying. So if there's a bunch of spam and a bunch of idiots being demanding and just getting out of line, overwhelming the chat with spam, like give me a bias, give me a bias, give me a bias, like what happened the other day, that takes away from the chat being valuable for you guys. So yeah, eventually I'll have a moderator, but again, I could manage at this moment. But yeah, so again, why am I not really focused on talking about price action currently that's moving right now, right? Why am I talking about other things? Well, first of all, these other things are important. Okay, but second of all, what in here encourages you that anything is exciting to try to engage? Right? Nothing. So your attention can't be so sucked into I need to find an entry when you clearly can see that things are not being very nice. Okay, you got to learn that it's okay to sit out and wait. You got to learn that taking a trade every day is not necessary, especially when price is telling you that it is not going to be cooperative. Okay, which is the vibe today. So yeah. And I appreciate you guys that do stick around when I do talk about other things. Because again, it's not always about technicals, but yeah. So again, these levels that we've been monitoring, we're still watching them. I'll probably get off, put a ribbon on this very, very soon, maybe in like 10 minutes, because it simply looks like it's just not really wanting to do much. I still do have an opinion that these equal highs may end up eventually getting targeted. It just has, again, accumulated orders down here. That's why it's spending so much time. If it does turn around and end up, displacing through the highs up here, that's simply what this was used for. The early portion of the AM session, it was used to accumulate below a logical level, in this case, London's low. Swept that out aggressively, enticing people to short, ran up aggressively, enticing people to buy, and then kind of stalled out again, accumulating, give another displacement here to try to pull people into more buys, came all the way back down, stopped them out again. So again, this is just a very vicious environment, and we anticipated that this could be a likelihood going into the session early on, like within the first 5 minutes, simply because of the higher time frame idea. Okay, we talked about the overall condition, the higher time frame candles overlapping one another. We talked about there being no news. The regular trading hours gap was a decent size. Another thing you can add on to a low probability condition identifier to add to the list is when the regular trading hours gap is extremely tiny, like 20 or 30 points. Anything below 70, I would say, is kind of rough. It may not really want to do much. Maybe 60. Actually, you could put 60. 60 sometimes is enough. But yeah, you got to layer all this stuff together, and once we do that, like we did today, it obviously told us what the condition was, or what it was likely going to be, which is high resistance, harder to trade conditions. We did outline potential scenarios. Neither of those scenarios took place. We did reach down into this midpoint. I said that if we break down below this low and prove it wants to stay below, maybe it can break through this and then eventually get excited enough to take out the full new week opening gap, which again, that didn't happen. It simply hit the midpoint of that, and we've kind of spent time between the midpoint of the new week opening gap and the midpoint of the regular trading hours gap for today's trading. So that's kind of been the range, you know, and it's been somewhat of an indecision candle, right? If you take the open price here, count this as a wick on the daily chart, count this as a wick as well. If we measure out that entire range, given the fact that that is the whole entire daily range from the open of London to right now, you can see where we're hanging out at. We're hanging out at equilibrium. Those of you that have spent time with me see that equilibrium, if we hang around there too long on the higher time frame or any other time frame, especially the higher time frame though, generally that promotes consolidation in harder to trade environments. So you add that on top of everything else that I've mentioned to identify a harder to trade environment, and it's just blatantly obvious that today has been a very obvious classic higher resistance environment, low probability condition. You know, and then yeah, so I hope the things that I've mentioned today give you a really, really solid list as far as what classifies a high resistance environment and how you can identify it. And even when price is printing out, how you can continue to confirm that we are still inside that high resistance environment. When it's not doing this type of stuff, when these things are not present in price, most of the time we're accelerating, okay, and moving towards one of those liquidity pools that I give you guys on that list. That list is very important. It brings you clarity. The list of liquidity that I talk about on a pretty regular basis. It's also in a list form in my free Discord and spread all over my private community as well. But again, it is in my free Discord for those of you that are new. Maybe you can go join the free Discord after we get off this or right now and go look at every pinned message at the start of every month. And generally that's where it'll be located, either at the start of the month when we do a monthly analysis, and then it's definitely at the start of every week. And it's always in the pinned message, like I said, for both the free Discord and the private community. Okay, so yeah, don't discount that. Definitely go get that if you haven't. Especially for those of you that are new, because you probably aren't aware of the certain liquidity pools. So remember what I said about this wick here, right? I said we're definitely going to want to see what the behavior is going to be here. I'm going to clean this up a bit. So notice how we're staying below the regular trading hours gap. We're staying below the first 30 minutes of the overnight range, and we're staying below, kind of bouncing around both sides of the New York session, first presented fair value gap. Again, this is all indicating that we're not fully committed to trying to attack the highs, which was the initial observation and target I wanted to see after price gave this displacement, sweeping out this low, and then off the heels of this. To confirm us getting up there, these are levels I wanted to get above. It spent some time above it, but it's like it hit a brick wall once it hit the regular trading hours gap, and then of course just came back into that equilibrium we just highlighted. Right, so we've had a day that has been inviting you to again blow your account, so don't feed into it. Yeah, guys, it's already almost 8:30. That means that we're going into the lunch hour. We do have a high here that's been set. We also have trend line liquidity. If we're going to stay below this new week opening gap, or below this first presented fair value gap, and if it does, kind of blow into the new week opening gap again, and we stay below these levels up here, stay below this wick midpoint, I would not be surprised if they blow this out, especially if DXY can give a displacement. Unless we get a displacement above, these levels up here, maybe even it may take us all the way up into this level for me to be confident if I was going to trade through this and try to target the highs up here. Unless this is violated or these highs start to fall off, with this high being taken in a fast capacity, getting above these levels here, breaking through this high, that would indicate to me that there may be a chance that would set up the run higher to target the London's high. But it could just very well stick around and not do anything, right? But if we stay below these levels here, and here, and this midpoint of this wick holds, there's a pretty good chance that we'll probably blow these levels out, maybe attempt to get down into this new week opening gap a bit more. And then that may be all it does today, you know. But again, there's a likelihood for it to do absolutely nothing. It has been a very sloppy, choppy environment. Maybe that changes in PM session. I don't trade PM session. Plus, I have to go see my little baby, my daughter. So I'm not going to be here for that. So yeah. But yeah, with that being said, guys, I guess we'll put a ribbon on it. As always, I appreciate the time you guys spent with me. Hopefully today was eye-opening in terms of the difficulty that a high resistance environment could bring. I hope it was even more eye-opening in terms of what leads us to anticipate a high resistance environment. That being no news, that being cracks in correlation, that being these three levels in here. Price not really trying to get away from them. Us being stuck inside of an equilibrium based on the overall range. The overlapping characteristics we see on that daily chart. Okay, back and forth overlapping pretty much across the board for all the indices. The heavy wick visual we could see here. And then, of course, we have a cracking correlation with the bonds and yields as well, which is just an addition to that. Okay, so all those things, like I mentioned, couple us up into an idea that we are in a high resistance environment. So I wanted to make sure that I mentioned that for those that have stuck around, maybe missed some of the piece of information. But yeah, again, thanks again, you guys. God bless each and every one of y'all. I hope you have a wonderful rest of your day. If anything significant happens, I'll share it in the free Discord. My private community students, you know what to do. If you have any questions, hit me up. Hop on Zoom at some point today. We'll be hopping on live tomorrow in my private community again tomorrow, as always, for our continued live sessions, right? And for you on YouTube and in my private or my free community on Discord, I will talk to you guys live again on Sunday. So yeah, that being said, you guys, take care. Have a wonderful rest of your day, and I will see y'all then.